It is earnings season once again. If you want to know exactly when earnings are, earning dates happen, they happen every day. They literally happen not every day, but every month. But if you take a look at the 4 months where earnings are concentrated, they are in January, April, July, and October. And as we're in July, really from the month of around mid-July to about mid-August is when we see the highest concentration of earnings for Q2. I want to talk about a couple of things. I want to talk about, first, how not to trade earnings. And then what I think the risky ways to trade earnings are, and of course, how we trade earnings. And I want to end on a couple of stocks that I want you to look at for this earnings season. The wrong way to trade earnings, it's called mean trading. I also call it the Robinhood crowd. The worst thing you want to do when it comes to trading earnings is look at a stock that's reporting earnings today and getting in and buying call options on that if you think it's going up, or buying put options if you think it's going down, and holding through earnings. Now, let me tell you why. Because you're going to find that 9 out of 10 or even 19 out of 20 times you're going to lose money. And the reason why has really not as much to do with price as that red line there, which is volatility. So, as an example, I don't want to die right before earnings, because what's going to happen is an example of we have where quite a while back, and I saw the call options. The call options were trading for the at the money calls were trading for about $5.25, and the put options were trading for about $4.78. I put them both on the screen because I want to show you. This is today, right before the earnings announcement. Because after earnings, look what happens. This is the important thing to see. This is before earnings. Even if you bought them both, if you decided, oh, I don't care whether it goes up or down, I'm gonna be right one way or another. Well, look what ends up happening. You end up still losing. In this case, you might have been right buying the puts, but you've been wrong buying the calls, and you've been definitely wrong buying the calls and puts together because of one thing, and it's not price, it's volatility. Coming into earnings, volatility typically gets quite high, especially for stocks that we have uncertainty on what's going to happen with those earnings. And so that drives a lot of option prices very, very high. It's called implied volatility. And then right after earnings, what happens? The unknown becomes known, the volatility drops, and of course, a lot of times people say, hey, the stock went in the direction I expected it to. Why did I lose money on my option? Because you had more money pumped into the time premium than you did on the actual drop. The right way to trade an earnings event is to get ahead of it and get out ahead of it too. So that means don't buy the day before earnings. Look at buying 1 or 2 weeks ahead of earnings and getting out the day before earnings and trading your options to somebody who likes to buy that real high, ultra high volatility, because we're going to trade the volatility. We're not going to trade the price. Now, you might say to yourself, well, how do I trade price and volatility? That's where pattern trading comes in. And if you know me, I'm a pattern trader, and I like seasonal patterns, but you can find patterns in earnings as well. If you go back and you look at the last several earnings, what did the stock price do coming up in the earnings? Did it have a history of constantly going up? Did it have a history of constantly going down? There's your direction. And then you want to also make sure that the volatility goes up into earnings. Because if you can find a stock where volatility and price go up at the same time, that's the time to look at buying call options. If you find a stock that consistently goes down into earnings and volatility goes up, that's the time to buy puts. This is the whole piece that I want to show you, because volatility often surges right before earnings, and then it drops just as fast as it goes up right after earnings. So when do we want to be in? Before everybody else. When do we want to be out? When everybody else is getting in. It's called scalping. It's very similar to scalping tickets at a major event. That's what we want to do. We want to surf those implied volatility waves. And we want to look for consistent directional moves. So you find these consistent directional moves and you trade them into earnings. All right. Here's my earnings picks as we head into the rest of July and August. And as you can see, I have 4 of them that I've got highlighted. Because if you look at CoreWeave, which is the #1 stock at the top, CRWV, you will find that it's had a history of going up into earnings. Okay. Now, take a look at PAAS. That's Pan American Silver. It's had the last 4 winners where we've seen at the money moves, where we've seen that stock move in the same direction before earnings, where we've seen the implied volatility go absolutely berserk. And I believe a lot of that has to do with what gold and silver have been doing over the last year. So take a look at PAAS. Okay. The last one I want you to look at is AbbVie, all the way down at the bottom. All right. KMI has already kind of started, that one in the middle. But down at the bottom, you got AbbVie. So AbbVie is 4-0 on both its pattern and its implied volatility. And if you take a look, for instance, the 2 that I want you to look at, that I want you to focus on going forward, and these are not happening. Really, I mean, the earnings for AbbVie are not happening until the 30th of July. The earnings for PAAS are not happening until the first week of August. So you've got 2 to 3 weeks to start planning when you look at these. All right? I want you to do the homework. I've spotted a pattern here. Can you spot it? Is PAAS, has that had a consistency of going up into earnings, or has it had a consistency of going down? Take a look. AbbVie, has it had a consistency of going up into earnings, or does it have a consistency of going down? What is the idea here? The idea here is to buy it before earnings and sell it right before earnings. Because again, there's no guarantees, but the patterns for these 2 have been looking spectacular.